Hello everyone and welcome to Day Trader S&P 500. This is Dale Woodson, one of Timer Digest's top ranked stock market timers. And while we've been trading for a long time, we have just recently started our day trading service. We're in our third year. You can see our success in the first year. Unbelievable, over 100%. Down year, second year, we got off to a great start in year three. So while we are relatively new to YouTube, we appreciate if you guys can hit that subscribe button and the reminder alert bell and hit the like button, as we appreciate you guys supporting our channel. And I must say, well, I'm new to YouTube. We've been around here for a very long time, and you'll get to see that as we're going to get into some analysis today on the S&P. We're going to get into analysis on Tesla, and we're going to look at Fibonacci Time Spirals, something that I've been doing since the late 90s. Might be new to some of you guys, but we'll start with the S&P. Okay, here is an hourly chart. This is the all-time high on September 2nd, and there is the first wave low on September 11th, and this is what we believe is the second wave high. We can get our Fibonacci retracement tools out here, and we can see that the second wave retraced a little bit more than a 382 Fibonacci retracement, and this is an ABC X ABC, a second wave decline. What I wanted to get into was this first wave down. Okay, there are a few different ways to count this, and you can count this as a 5 wave. You can count it as something else, and I'd like to see what you guys think. Okay, put your Elliott wave hats on. But here, this is one way to count it. Here's wave 1, there is wave 2. This could be wave 3, this could be wave 4, and this could be wave 5. There's only a couple rules with Elliott wave. One of them is wave 3 cannot be the shortest, and the high of wave 4 cannot go above the low of wave 1. Okay, so that looks good there, but if you get into 2, you can see here, this would be, let's count that out. There's a problem with this one. There's a problem with almost every one of them. This is a tough one to figure out. That would be 1 down, that would be 2 up. If we did 3 here and 4 there, it would be overlap. So this could be 3, and this could be 4, and this could be 5. Okay, that satisfies all the rules. This satisfies all the rules. Let me change this this degree here so we don't have the same degree. There we go. Wave 3 is of a different degree. So there's a 1, 2, 3, 4, 5, and within 3 we have a 1, 2, 3. See, that's the problem there. There's 4, and there's 1. Okay, we can't ignore that wave. So there's a lot of different ways to count this. You guys let me know what you think, okay? We'll see how that goes. Let's get into the time here. All right, we're going to look at dates. That's September 2nd. This low is September 11th, and this high is September 16th. So if we can look at our, I believe I have it here. No, I don't. Let's see where I have that at. It is right here. Okay, here's that same hourly bar. There's the September 2nd high, the September 11 low, and the September 16 high. In our Fibonacci time spiral, and I've been doing this back since 1998, and I'll show you guys how it worked back then. Fibonacci 8 days gives us the target date of September 10. Missed it by 1. I call that slippage. That marked wave 1 down. The next number in the sequence is 13. That gives us September 15 for target date. And the same, missed it by 1. If this holds, then wave 3 down would bottom a week from now on September 23rd. There's a few things that have to happen for that to happen. One of them is this wave 2 high should not be violated. That would give us a different day. It might be off by 3, but this would be ideal. Another thing is on our way down, we'd have to take out this gap, close the gap. The S&P would have to make a new low below wave 1. And there are our targets were 3 equals 1 and 3 equals a Fibonacci 1.618 of 1. So this we've done before, and we can show you our Fibonacci spirals. This goes back to 1998-99. We had an orthodox top, In August of 99, Fibonacci 55 days later, we had a low, and then our spiral caught every one of these highs for the next 7 years, or a couple in there. It didn't get, but it nailed them all. Didn't nail the lows, but it nailed the highs. And we have a different chart here that combines. By the way, this was done, you can see copyright 2006. We had where we combined the table and the chart, and this shows the chart with all the tops that were caught with a little bit of slippage. We had a weekly bar, we had a monthly bar, we had a daily bar. They all called the tops for a long time. So the spiral is great when it works. Doesn't work all the time. That's the thing about it. When it's wrong, you lose money. So we'll see what happens. Okay, and we can look at that that 2000. Let me get that report out from that date. Bear with me here while I find that report, and it should be there. Okay, way back when I started doing Woodson Wave Report, we didn't even have our own website name. We had that there, and that company's been long gone. This is from August of 1998, and we'll just scroll to the bottom and get to the meat of it. Here's our wave counts, and here's where we started counting with a Fibonacci time sequence. We had wave 1, Fibonacci 21 days, 2 was 5 days, and 3 will last in the future if it bottoms, 13 days if it bottoms on 9-1. Okay, and then we said that we could expect, and I got this in bigger type here. Okay, here we go. We could expect a mini crash to occur on Monday, August 31 to end wave 3 with a lower low on turnaround Tuesday, September 1. From there, the market should rebound in wave 4. Okay, and that's where we found that it happened just like we expected. This is 1998. That's the July high. There is September 1. There's our August 31 low with a turnaround Tuesday, lower low on September 1, and then we move up. And while it might not look like that big of a decline for that time, and even now it would be, that this is a decline of some 21% in 45 trading days. So that worked out nicely, and it worked out for the next 6 years. So we'll see how this one works out. By the way, we gave you guys those targets, but let's just remove that there and clean this up a little bit. And let's look at our wave count and our Fibonacci extensions here. So if this is wave 1 and this wave 2 holds, then we could see wave 3 equal wave 1 at 3148 and a Fibonacci 1618 extension at 2974. A lot of things have to happen for that to play out, so we'll see how this does play out. Let's move on to Tesla. Tesla's high here on September 1. We're looking at an hourly chart, and it bottomed on September 8. Okay, so what's our Fibonacci retracement there? And unlike the S&P, which only retraced 382, Tesla retraced almost a perfect 786, and we can see the same ABC X ABC. It's a 335 pattern. Okay, for this to be accurate, this high has to hold. This high is make or break. Anything above here, obviously the all-time high. This is not a wave 2. And again, wave 3 would have to close this gap, close this wave A high, close this wave 1 low. So if that is wave 1 and wave 2, let's clean this up and get a Fibonacci extension here. And we have a wave 1 down, we have a wave 2 up, and wave 3, this was a big move, so obviously wave 3 will be a big move. If it equals wave 1, it takes Tesla down to 288, and if it's a 1618, it takes it down to 180. Obviously, the highs have to hold this wave 2 high, or it changes the wave 3 target, and this all-time high, or this obviously is no longer a 2. So again, you guys, thank you for watching the channel. We like you guys to subscribe and hit that like button. And until next time, take care, everyone.